Before we place any trades this week, we have to review the dollar and oil because this macro and ES overnight especially is not performing really well. We are gapping down, as we can see. We're almost down 2%. That's actually insane. So we're gapping down 2% almost overnight before Monday open. Now, let's go over to oil and let's see what this is looking at. Oh, God, 20% is kind of insane. I don't think I've ever would have seen oil gap up this much. Okay, so we caught out before this wedge. We broke out. We retested it. Like if you go to the daily, right? We had a break, we had a retest, and then we just started absolutely ripping, right? Due to Iran. Now have already seen the main target of $95, but now we're sitting at 108. The question is, could we go to all-time high? I mean, that is possible. I mean, it's definitely not out of the board, but we already saw the main target, so not anything extra, anything above is now extra, right? So we also still have a gap at 92 to 97. So oil very well could start fading this pump, but there isn't really any other higher targets now. Doesn't mean the top is in, right? We could still continue higher, but I don't see any more actual real targets, for oil. We do have some major highs right here at 130 and also at 122. We could go higher just to take out those highs. We could consolidate here, or Trump could come out and just say the war's over, right? And then gas prices goes right back down, right? So this is definitely a very, very volatile move for oil, and it's hard for me to believe that it's actually going to hold and stay high for this long unless something crazy happens, just because of how much we've just been gapping up for the last 2 weeks. Okay, so it really depends on this war and what comes out with it. You can't really predict that. So overall, for now, for oil, it's just kind of hold, right? I still hold my CTI, I believe is what it's called. CVI, sorry. I still hold CVI, which we should see a really nice 5% gap higher on this name just because oil is absolutely pumping. And on top of that, OXY is also up like 5% in aftermarket right now. Now, I did say that CVI was a better buy just because of better risk to reward. So we'll see how that's will play out. But so far, it has been spot on, right? Even though OXY was green Friday, we actually are red since the start of the week, right? Versus OXY is actually very green. So overall, I still think CVI will be the better play for oil. But yeah, this is definitely not going to have a good look on the market. We do have the inflation report Wednesday morning at, I believe, 7:30 a.m. Central. Now, will oil actually affect the inflation report that's going to come out next week? It's really hard to say. I don't know if oil can actually change the inflation report that fast. It could, but one thing's for sure, that if it does, the market will definitely not react good to that, right? So this is the ES chart. We are down 1.8%. We are now at one target, but the main target still remains at 6,529, which on SPY would be 649, right? So we're sitting at right now about 657 on SPY in after hours. Now, my minimum target still remains 649. Now, I do believe we will go much lower than this. I think we'll probably see around 603. That is really my main target. If we want to go deeper to fill in some gaps, then 565 is probably the level that I'm going to be watching if we want to go deeper. But main target that I'm actually watching is 603, minimum target 649. Now, this is the minimum target just because we broke down out of this rising wedge. And we were also closing below this moving average, or we already did close below this moving average just last week. Okay, and we also rejected that red resistance zone. So now if we go to QQQ, we did close underneath this trend line. Now, of course, we were expecting a bounce because this was wave E for another leg higher. But as soon as we close below and we hold below, then that immediately invalidates every bull thesis. Okay. Now, the only way this can completely reverse the chart back around, is that it just turns into a false breakout. And that is either a gap up Monday, which is not going to happen unless they end the war from now until Monday open. But as of right now, we are underneath this trend line that we closed Friday. And right now we are gapping down. For QQQ, who knows? Because ES is almost down 2%. QQQ usually will be more than that. So like if we just match 2% for QQQ, right, we're already way below like this breakout level. Like right now, if we open up like that, there is almost no way that this can be a false breakout, right? So that is definitely not a good look at all for the market. So any longs that we are looking at is basically now out of the board. Tesla, Mag 7, Nimbus, Wolf, anything, it's all off the board now just because the market is looking like it's going to pull back for sure. I mean, we're losing all the support levels. And if we go to NVIDIA right now actually did close below our support level on Friday, which is why we pushed QQQ down below that trend line, right? So even though we are still expecting a bounce at this trend line for 230 on NVIDIA, just because we did close below, and now completely, again, same thing with QQQ, completely invalidates the bull thesis and now flips to the bear thesis, right? Now, target for NVIDIA is definitely not pretty. I mean, with a wedge, your main target for that wedge, again, for my mentorship students to know, is the very bottom, which is 87, which that is like really, really, really low. So I don't think we're going to be able to see that target unless we actually, this is like the top for a correction, right? Not saying it is, but if it was, then that is probably where we'll be aiming at, right? Now, or probably lower, but, you know, for a short pullback, probably not. You know, for a short pullback, we can probably see 133. If we hit that minimum target on SPY, then we're probably going to bounce somewhere in the $150 range on the screen zone. But if SPY pulls back right, like I think it's going to, then we're going to at least see probably 132 for NVIDIA. Now, again, that's certainly not good for the market, right? Definitely not great. So NVIDIA rolls over, SPY, QQ obviously is going to roll over, and it's already rolling over, right? Now, if we look at the US dollar is actually up another 1% about at the start of this week, or Sunday, right? Yeah. So this is not good. The dollar is starting to go up, right? And we know that when the dollar goes up, it does drain liquidity out of the markets, which then affects the market in a very, very negative way, given the 1 to 3 month delay. Now, the dollar, just be clear though, the dollar is just now going up, right? And it still hasn't made a significant move higher yet. So the dollar, as of right now, has no effect on the market, right? That's not why the market is tanking. Now, if the dollar does continue to rise and we see like, 103, 104, 105, 106, then that will significantly affect the market in a bad way, even if the market's already tanking, right? Given that 1 to 3 month delay. So we're probably not going to see any changes to the market from this move on the dollar until June, right? So around roughly the third quarter, end of second quarter, right? That's when we would actually expect a negative move in the market if the dollar does continue to rally, right? The dollar is definitely not bearish by all means. It's not bearish at all. We are accumulating, taking out lows, holding support, and also having a massive bullish R-side divergence, right? So dollar is bullish, right? I do expect a massive rally for the dollar, just as I expected a massive rally for oil, okay? So none of this macro lines up for a bullish stock market at all. Not for another leg up, nothing. Like this is not great for the market, right? Now, is it enough to push us into a recession? No, I don't think so at all. I mean, could it spark one maybe, and it leads to something very much greater? Possibly, but it would have to get way worse than it already is, right? So I don't see this as a correction, or for now, it's just a small pullback, right? There's no actually full catalyst that I can see that's really valid to support a correction, other than just a sharp pullback in the market to have a bad half of the year, or the bad of the rest of the year even. We'll see how this plays out, but definitely not bullish for market. So I know a lot of people have been saying buy the dip, and which would have been right. Buying the dip would have played out. It would have been accurate if QQQ could hold this wave E for support, but we very clearly did not, right? So as of right now, if anyone keeps telling you to buy this dip, it is not a dip to keep buying, especially in tech, right? I entered a small position in Nimbus, right, trying to predict a break. But as soon as I saw rejection, I sold everything, right? I sold it all. Very, very small loss. Like, it was basically break even. I didn't want to risk holding over the weekend just because of a gap down, right? So, which is what's happening right now, right? And then also rejection on a tech stock when we are not really sure yet if QQQ is going to actually go for that another leg higher or if we're going to break and gap down over the weekend, right? So, wasn't really worth the risk I saw from Nimbus. That is why I kind of exited Nimbus. But now let's get into the Mag 7 really quick, right? Because I know I shorted Apple with puts. I made a decent chunk of money on there. And you could also held some puts and held some shorts, right? I did want to hold Apple shorts for a while, but it was more of just like a day trade and a swing. It was really a swing trade. I think it was a 2-day trade. But if you were actually to hedge your portfolio, you could short Apple for that hedge, right? Kind of what we discussed on the last live call that I believe, or maybe it was just a video I posted. But anyways, Apple can be a good hedge if you're going to short, right? Out of all the Mag 7, the only two that I would actually short would be Apple and Google, right? Anything else I wouldn't. You could do Meta because we're just rejecting its moving averages, but it's not as clear as Apple and Google is. Microsoft is bouncing out support, nothing short there. You could do Nvidia, you could. However, you do risk like some type of false breakout because I haven't looked at where Nvidia is opening at in aftermarket right now. I know it's not good, but I don't know if like a very clear, obvious short would be Apple, Google. Nvidia would be the third, but I probably wouldn't. And then Amazon. Actually, no, I take that back. Amazon's third. Nvidia will be fourth because Amazon is rejecting resistance here. We did reject that key level after that gap fill, and we absolutely dumped. I missed a A++ short on Thursday right before close, and especially not only that, like actually Friday open when we came back down and retested yesterday's lows right there at 215. And then we retested that and then absolutely tanked. That was like an A++ short position that you could added, or even bought more to your short position on Amazon, right? And then for Amazon, if we do pull back a lot, and like the market does absolutely flush, then Amazon's target is 138. We also had this massive bearish RSI divergence, wave 5 top, bear flag for wave B. Amazon is definitely not a great look, right? I do expect much, much, much lower. That is really, really low. So it really depends on where SPY bounces, right? If SPY goes to my main target, like I think it's going to go, so not my minimum target, but my main target, then I do believe Amazon could reach around 140. It's still a little, it's pretty deep, but I think we can get there. So that's basically the Mag 7. That's basically the macro, right? Dollar, do expect to rally. Oil, I don't expect any more rally. We definitely can, but it's not something I'm going to be playing off of anymore. But I'm not selling my oil positions on CVI, but that is something I wouldn't really looking to start a new position, especially with futures on oil. I definitely wouldn't be doing that at all. Now, a few hedges I like is FNGD is basically a short on the Mag 7 with Netflix added on there. So to me, it is definitely a lot better. Just because it's a little bit safer than just having direct short on Apple, right? Because if you have a direct short on Apple, it may not play out. And although it looks like an A++ and it looks amazing for a short, right? But, Apple may go up while the others still go down, or may consolidate even. So that's why I like just playing FNGD, just an ETF. So this can be a good hedge, right? Another one would just be a direct short on QQQ, which is SQQ. We do have a massive bullish RSI divergence. We did break out of this bullish wedge Friday at close, almost signaling a gap up on Monday morning, right? Because we had a breakout. So it's definitely not a good sign for the market. SQQQ could actually print heavy. I mean, if we go back to January of 2025, of how much we actually saw it there, that's just crazy. That's just absolutely crazy. So if we get a replica of the same drawdown or even more, which I do expect probably a little bit more this time, then it will definitely be absolutely nasty, right? I mean, how much do we go up on January? So we went about 120% roughly. Yeah, so That's, I mean, 120% gain from that low would be around 139. So definitely a absolute huge move, right? This is a move that you could actually profit from during this market pullback while everyone else kind of loses money. Now, I'm not saying, sell all your long-term positions, right? Not at all, right? Maybe you're holding something for long-term, absolutely hold it, right? But this is for, I guess, your active portfolio swinging for a few months out, right? But overall, those are the hedges, right, that I would be placing. Well, you actually should have already been placing if you weren't already in the market for a bet on this macro pullback, right? And man, ES just looks absolutely nasty. He's looking at that. That's just nasty, man. I don't know actually what really fueled this push down over the weekend, but whatever it is, it's definitely not good. I'm definitely very curious to see where VIX is going to open at because we do have a VIX gap sitting at $36. I've been screwing this since October, saying that gap needed to be, actually maybe even September, that gap needed filling, and it looks like we're going to fill it probably Monday morning. I mean, to be honest, VIX very well may just fill it in Monday, right? We may just have a huge gap up and then fill that gap, right? Which will be good. I mean, good and bad, I guess, in a way, because it's not, once you fill that gap, then that kind of hurts your bearish thesis, right? Because now VIX doesn't necessarily need to go higher to fill a gap, right? So once it's already filled, that does hurt your short or bear case just because now the VIX doesn't have any reason to go higher. It doesn't mean it won't. We very well can. It just kind of takes away your target, right? Once something hits your target, then anything above is just extra, right? So I do think VIX will probably see a massive gap up Monday, or not probably, it absolutely will see a massive gap up Monday, and then we will see $36. Okay. But that should be everything that I am looking at in the overall market. Yeah, HSI not great, not really good looking. Now, this could go higher. SPY pulls back, maybe, but absolutely, yeah, I think actually definitely could. We are at that retest level, so China stocks could, although it's not going to beat a direct short on the market like with FNGD or SQQQ or maybe even oil stocks, to be honest. I don't think it's going to outperform any of those, but that's definitely going to be better holding China stocks than it is to hold tech, right? So although I still don't think it's going to do better than what I called out earlier. So yeah, and NES finally hit -2%.